right, and good going considering it looked like it's going to be one of those quiet days tracking the global cues, which wasn't the best of handovers. We started off quiet, and from there we've actually picked up steam. So closing in on that 23,000 print for the Nifty, it's about a 90-odd point move that you're currently seeing 1 hour into close. Having said that, today's texture of gainers is a lot more different. Yes, you have Shriram Finance still topping the charts there with another 4% of a dash up, but it's largely some of the metal and PSU plays which are actually leading today. So look at Tata Steel, for instance, holding up 2.5%. There's BEL, which is looking very smart. There's L&T, which is holding higher. And then, of course, there are others like an SBI as well, which are higher by about 1.5%. What's not looking good, once again, it's IT. Sectorally itself, it is weighing heavy on the indexes today. And other than that, there's FMCG as well, led by ITC, Nestle, Britannia. They're also laggards today. But yeah, the concentrated weakness continues to be within IT. So Tech M down 2.5%, TCS down 1.5%, Infosys down 1.5%. That said, the breadth of the market is much more lively than what's happening within the large caps. I mean, look at it. There's 190 stocks standing to the advances with just about 31 within the F&O universe itself. Idea has spurred up about 7.5%. The 5G launch clearly acting as a fillip. Policy Bazaar, this is one stock which held out or rather has been seeing dashes of green off late. And today it's a straight 7% spurt on that stock. There's Max Healthcare, which is higher by 6%. You have been seeing for the last 2 days, along with the market rebound, buying coming back into realty names. Today it's Prestige, which is higher by 6%. And then there's Titagarh Railways as well, which is higher by a good 6.25%. So quality mid-caps as well have been actually seeing buying, which is, I guess, a healthy sign. But let's take our conversation forward. As always, we've got Kunal and Naresh with us. Kunal, what's it looking like? It's not bad given how we started off.
No, I think it's a very good handover for the markets from the last couple of days, especially at a point where over the last many weeks we've not been seeing any major follow through price up move. So yesterday we were discussing that this could be yesterday could be a breakout day for the index. Today I think what we've seen is more of an confirmation move that the indices are going through a trending phase on the upside. Now the first impediment or the first resistance for the index resides closer to the psychological mark of 23,000, which also coincides with the 50 DMA for the index. My sense is that we should be seeing a further at least 100 to 150 point up move for the index before we first scale to the major resistance point. Even there, I would believe that there are high chances that we may just about consolidate for a few days before we move up higher. So the bias remains extremely bullish. We are now looking at 22,500 as a very strong base or a support for the index. Keeping that as a stop loss or a support, I think traders could look at building up long positions over here.
Okay, look at building long positions at these levels. Naresh, what's the sector you think is going to form the leadership should the market rebound even further from here?
So clearly it's been the banking and the financial space. So the fin services index has hit a 3-month high. You have banking names making a comeback. You have Kotak Bank hitting a new 52-week high. You have ICICI Bank 2% away from an all-time high. And now we have HDFC Bank also trying to make a move. So overall, banking and financials is the space. You have Bajaj Finance at an all-time high. So clearly, banking and financials. So a lot of small NBFCs could take the lead also in terms of price action. And overall, we've seen an 8 to 10% bounce in the small cap index from the lows. We are up 2% for the day. So good broader market strength as of today.
Yeah, good market strength, or rather broader market strength as well. But Dhananjay Sinha too joins in. Dhananjay, hi, afternoon. What's it looking like? Seems like the tide is finally turning around. And I mean, is the recovery looking believable to you?
So I think we've had a significant correction in valuation, especially in the large cap names. If you look at Nifty and all, the valuation had corrected a lot. I would say even the broader index, while it is still at a premium versus the benchmark, it had undergone a severe correction. If you look at the stock performance and all, so I think what is now happening is the anxiety is actually fading a little bit. I would say from a global market standpoint, the concerns with respect to Trump tariffs and stuff, that anxiety is kind of coming off in the context that people do believe that with an expectation of a recession in the U.S., there might be some tempering in the strident move US had taken with respect to tariff hikes, etc. So that part is actually coming off. I think the risk-free rate in the US has actually come down. US 10-year has come down from 480 to 420 levels. VIX index has also come off. So I think if you look at some of the global dynamics, it's kind of somewhat easing, and that kind of is supporting the markets as well, market sentiment in general in India, wherein we have seen a significant FII outflow earlier on. So I think there is some comfort that is happening over there. I think from an India standpoint, also we've seen that RBI had actually pushed in a lot of liquidity through OMO purchases, the rupee dollar swap to infuse liquidity. And I think the amount of liquidity that RBS had put in through these measures, CRR cuts since December is of the order of roughly about 6.9 lakh crores. So I think there is certain infusion of liquidity. RBI has also eased the regulatory tightness with respect to NBFCs. It does appear that they are trying to address the slowdown with respect to using a certain relaxation for the financial sector. So what we see is a culmination of all these factors sort of easing the pressure on the market, and there is a certain buoyancy, at least sentimentally, it does appear to be happening. So I would say that's where we are, and especially after a severe correction, it is creating a certain amount of buoyancy. We'll have to see whether this translates into a fundamental upcycle from an earnings standpoint. I think that is a few months away. But I would say in the interim does look to have created a sentiment which is positive and which is reflected in some of the depressed sectors. I would say especially the financial sector is actually responding quite positively because it's very close to what RBI is trying to do. So it's a proximity of that this sector to RBI's move is very strong. So I think that is where we are seeing all the NBFC space and some of the banking sector names doing well. I would say PSU banks have seen a correction, but I think they are not participating at this juncture. But yeah, so I think people are looking at beaten down stock and trying to do some bottom fishing even at the broader level as well.
Okay, that's that on the entire banking pack. But other than the private banks and the large ones, Kunal, where else are you finding strength and opportunities to buy within banks right now?
I think now the point over here, Aisha, is that it's time to look at alpha or generation of alpha. So I think the higher returns would probably get generated into the mid cap category of the banking names, both in terms of the private sector banking names as well as the PSU stocks. Now, for example, we've seen ICICI Bank, HDFC Bank, Kotak Bank being one of the strong performers from the large cap banking names. But then somehow these stocks are just about going through a very tepid uptrend when you look at the intensity of uptrend across the mid caps. So, and then you look at the second composition of the banking names. You're seeing the PSU banking stocks making a strong comeback. Names like Bank of India, Baroda, PNB, etc. Whether you look at the large cap PSU banking names like SBI, or whether you look at the private sector banking stocks, IDFC First Bank, etc. Many of these stocks are now looking very attractive over here because now we are looking at a potential that these stocks would not just have formed a base for themselves, but the risk reward over here to enter into these stocks would be relatively very attractive because many of these stocks are still reeling almost 15% to 20% broadly below their long-term moving averages, and that too at a point when the large cap private sector banking names are above a margin of 7 to 10% higher than their longer term moving averages. So when you have such kind of a steep divergence, it's bound to be that the mid cap end of the sector would try and play a catch up. I would believe that it's a good time to try and chip into those PSU banking names as well as the mid cap private sector banking stocks.
Okay, some of the mid-cap banking stocks as well looking interesting to trade. We'll take a very quick break on that note now, and it's holding up quite nicely. We're inching closer to that 23K mark for the Nifty, to 70 points shy from that. It's important to see what the European markets as well are up to, and unfortunately, you've not really got any support there because they too have started off a little bit soft. There is that big event which looms large, the Fed policy meet outcome, although it's a status quo that the street is anticipating their commentary on the future course of rate cuts, and more importantly on inflation and growth is something that street is looking out for and eyeing. So yeah, you've got the pre-market rates for the US futures as well, which are looking very, very tentative and quiet right now. You're not seeing any big moves coming in there. So pretty sedate move is what you're seeing for the markets. Having said that, Hong Kong and Shanghai also were no different. One would say that we are actually the region outperformers today, holding up as steady as we are, because the rest of the globe is very, very sedate and lackluster. That said, the one space which is also looking very smart, look at some of these defense names, or rather the shipbuilding names in particular within the defense pack. Look at a Garden Reach, look at what Mazgaon Dock is doing. India apparently is in talks with South Korea and Japan companies for local shipbuilding. That's what some of the reports seem to be indicating. Garden Reach is now sitting at a 20% move, and Mazgaon will just come up for you on your screens next. That stock is well on a tear right now, an 11% uptick is what you're seeing on Mazgaon as well. Dhananjay, I think, that debate on whether to go back to those frenzied defense and railway names keeps coming back. And, one is a little wary about getting into these names once again. What is your own call on how one should approach defense and railways, and whether they should not be painted with the same brush as we did till about last year?
So I think, you see, this comes in the overall context of government capex, and what we are of the view is that ability of the government to really push a lot of infrastructure and capex spending will be limited. I think in the context of how the fiscal situation is panning out, the tax collection. If you look at the data, especially after July, there is a fairly tepid growth, in the overall context. Especially there's a decline in corporate tax collection, and government is actually going ahead with a tax cut next year as well. So I think we have to be a little careful about the capex plan of the government. I would say, defense is something that can hold on. I think this is something that is far more resilient from a geopolitical standpoint, and also what is happening globally. I would say that is something that can actually remain somewhat stable. I would say on the railways also, I would say that the government has spent a lot over the last 5-7 years, and I think you might be at a maximum level of spending that one can expect. So I would say between roads, railways, this is like infrastructure spending, and I would say defense. Defense look to be much more resilient in the context of the geopolitical development that is happening. We are seeing a lot more, investment that might be done in Europe, for instance, because of the sort of a new capability that those guys would be building up, and also in general the geopolitical context in Asia as well would also prompt government to ensure that they keep on spending out there. So there's been a correction in prices for HAL and BEL. If you look at the defense names, there's been a significant decline over the last 6 months. I would say one can look at those selectively. There can be some rebound that can happen because the stocks have corrected. There's good amount of valuation. So I think there is a possibility of a little bit of rebound out there.
Interesting. Dhananjay, great to have you on the show and join in with your thoughts. Thanks for your time as always. Okay, let's halfway mark, half an hour more to go before we wind up for the day. Naresh, let me come to you. Any mid-cap strategies given how lively the broader markets are today?
So that would be a buy on PFC. The stock has given a bottoming out confirmation as well as a breakout above 400. Could head up towards 430, 450 in the short term.
Okay, that's a buy coming in on PFC. Kunal, what about your mid-cap strategies?
I'll go with the buy on HDFC Life. I think after quite some time, the stock has made a very strong comeback, and especially I think with the stock breaking above its 200 moving average today.
Okay, that was a closing strategy. I stand corrected, not really mid-cap, because HDFC up with closing trades right here on ET now, holding up quite okay. So we're just around the 22,930 odd level in trade. So status quo really after that peak that we've hit. Into of a notch up is what you're seeing on Interglobe Aviation. It's been, really mesmerizing as to how some of these solid names have, this, and there are many others in that list. Case in point being an M&M, Bharti, and many other mid-caps as well, which have just not fallen fallen in the recent market correction, and that really shows you some leadership. But Pashupati Advani as well joins in on the show. Pashupati, hi, afternoon. Have you been buying the market just yet? Anything that you may have added to the portfolio?
Well, it's been a quiet time, and as you said, I mean, the markets came off a lot, reached almost close to 22,000 Nifty, and is now back almost at 23. So that's great. But I think we're actually range bound. But I do see merit in maybe looking and trying to scavenge in some of the defense companies, because given that the world looks like it's going into World War III, and I don't know if we're prepared. So definitely defense companies are something that we should be looking at. They've all jumped up very heartily today, but I think that this is a trend that's there because we have to spend money on that. We are, I think, behind in the game, and I think that we can't depend on Russian or American armaments, particularly if the tariff barriers go up. So that's my thought as to what to be looking for.
Right. Okay. That's the take on markets. But in the meantime, the form being interesting right now. You've got a Prestige, which is holding up very well. There's Policy Bazaar, there's Titagar. All these names are looking quite smart. Kunal, earlier today, we were talking about yesterday's movers, the likes of a Paytm, PB Fintech, today this Policy Bazaar, and of course, Zomato as well, which spurt up quite nicely yesterday too. Anything where you feel that, there's conviction to buy?
Yeah, I think even further from current levels, Policy Bazaar, Paytm, these stocks I believe should see a more higher traction from current levels, because these stocks are poised in a different manner. Some of them are trading above their averages, some of them are trading at much lower levels in terms of price support. The volumes in the last 3-4 days has been much on the higher side for these names. And even in the last leg of the sell-off, say in the first week of the month of March or the end of February, the volumes were pretty much on the higher side. So which means that the rest of the fall for these stocks has been immediate on the back of higher volumes, and then the build up towards the rally is also on the higher volumes for these stocks. That generally is a very strong indication that we are looking at a formidable bottom on the near to medium term charts for these stocks. So I think even after this 3-day rise of say 5-7% broadly for these stocks, I would still believe that they could be attractive proposition from a short term play.
Pashupati, what are you feeling about this entire, new age tech space, if we can call it that? They too have corrected in the recent market fall, but a Zomato, a Swiggy, PB Fintech, Paytm, anything that's looking interesting to you?
I think they're all worth looking at and worth nibbling. I think I missed the bottom, but I think that they're very much here to stay, and as long as they're here to stay, they're pushing all the smaller players out, and I think that that means that they're definitely worth a buy, because they'll get more and more traction as time goes on. The other thing that's happening is that we're also seeing some move towards the traditional industries which the government is still continuing to back, like infrastructure, like steel, like cement. Because road building is still going on, real estate has to be finished. So those programs are still going on, and the government is still the major spender, as opposed to the private sector, which has not actually really started expanding too much. Few companies have, but most of them haven't. So I think that that's another thing to look at, and that's another place where money is being spent, and that will turn to returns. Aisha?
Right. Further to that, Pashupati, I was just hearing my colleague talk about what the management communication from Interglobe Aviation has been. But what is the best way to capitalize on this entire, trend of Indians traveling a lot more? Is it via hotels, or do you think you would stick by with an Interglobe?
Well, Interglobe has jumped a lot, and I agree that I personally think the numbers are really optimistic, because to double in whatever 4-5 years. Again, new players. Air India is going to be a serious player. It already is, but it's just getting its act together. It doesn't have planes. If it had planes, I think they would be going head to head with Interglobe. But I think Air India is going to be a significant player, particularly since Air India also has a lot of very good international routes. So I think that it's going to be the full service versus the budget airline. I don't know how the other budget airlines are going to do, but I think that they will also have a place. But honestly, 500 million for Interglobe alone, given that today they have 50% of the market, that means 1 billion people traveling. Wow. Are our airports ready? So maybe we buy airports if we can.
Well, I think the problem is how shallow both aviation and airports are when it comes to the listed pool. But yes, get your point completely. Let's just look at what some of the FMCG names are up to, and whether or not this was just a tactical move when the markets were falling hard, or is that strength or move looking sustainable at all. Let's just see the last 1 month or year-to-date charts for the likes of not just ITC, but even for a Britannia, Nestle, and more so the rural plays, the likes of a Dabur, Marico, or a GCPL, etc. They've done nothing actually in the last 1 month or so. In fact, some of the names like a Dabur have fallen about almost 5% or so. Naresh, anything from within the staples that's looking interesting, or do you think that's not such a high beta space now?
So this is a space which has seen a large correction, but we are not seeing recoveries come back very sharply. So the only name which looks interesting is Godrej Consumer. That's seen a correction, and I started seeing a recovery in the last 3-4 sessions. So I would only go with Godrej Consumer in this space.
Okay, that's the take coming in on some of the FMCG names. Other than that, just want to look at what a Kotak Bank is up to, what ICICI Bank is doing right now, given that, that big spurt in ICICI Bank yesterday and the way that it supported the index. It's standing put at that 1300 mark. Pashupati, it's almost a consensus, right, when it comes to private banks, and Kotak Bank has taken the surprising leadership and has begun that move in the last 1 month or so. But where is it would you be comfortable within the entire large cap banking space? And I'm going to throw in an SBI as well into that list. Where would you be comfortable putting in extra money to work?
I've always been a great believer in SBI. It's just a function of they're just so big. It's very difficult to unlock value of their depositors, of their client base. But they're gradually doing it, and I think that's what's making them be a big player. The other thing is it worth taking a punt on IndusInd Bank, which has had a few problems and has dropped quite a bit? That's also a very speculative stock, but that also would be worth considering, simply because I think the bank is okay. That's a personal opinion, but I think it's okay. So I think that it might be worth it to as a trade, and then we'll see what comes out as things come along. But I'm glad that they've actually put some numbers on the table. They had some losses, which I guess they were trying to push off, and then finally decided to declare it. So I mean, that's always a good sign. And of course, HDFC has been the market leader, and any new money is going to continue to come into HDFC and maybe SBI and ICICI as a first. So I think that's good for all of them.
Okay, that's that on banks, and of course SBI, which has also been quite strong of late. But let's get in some BTST ideas as well going on that note. Naresh, what's on your list?
So first is a buy on PFC. The stock has broken out above 400, multiple bottoms at 360. Stop loss at 399, target price of 415. Second is a buy on Oberoi DLT, which has seen a 25 to 35% correction from the top, making a recovery move today. Stop loss at 1600, target price of 1660.
Right. Kunal, what about your BTST ideas?
So I'll go with the buy on Siemens. That's a chart which has started to look attractive. In fact, after the last 4-5 days of a price correction, the risk reward starts to look very attractive, close to this 5,100 mark. So we'll look out for targets in the range of 5,500, stop us at 5,000. And the second is a high beta stock. It's a buy on IEX. And I sense that the stock is on the verge of a breakout, yet again of a double bottom formation. So we'll look out for targets in the range of 178, stop us at 162.
Okay, that's that on some of those BTST trades. But the ones get any commodities, would you right now? Metal, cement. Many believe that there is merit in how much of a bounce could come in these sectors.
Well, I actually haven't sat down, but I probably should sit down and see how much we are importing versus how much we're producing, because I think this is going to be the game where any commodity that we get that is an import substitution is going to be worth buying, because obviously people will have to pile into it, because tariff barriers are just going to make it too difficult to import. So, if you do that analysis, I'm sure you'll find, maybe steel, obviously people have looked at, but I don't know whether aluminum is on that list or not. But I think that the tariff barriers, according to me, are here to stay, and there's going to be some pain coming up over the next 3 to 4 months.
Right. Okay, that's the tick coming in on metals right now. In fact, Naresh, quite strong going on the entire metals pack today. What's looking good to you, and where do you think perhaps a follow through buying or move could come in?
So NMDC is the one which has given a breakout today above that 68 mark, so that could do well. On dips, it continues to be Tata Steel, which looks interesting, where the stock has started trending well. So it would be Tata Steel and NMDC in the middle pack.
Right. Okay, in fact, also, what do you stay away from? And it seems like it's kind of obvious there, or at least market has handed out its verdict that it's definitely IT. There are too many moving parts. What happens to US growth? The advent of AI, how that evolves. Seems like IT is avoidable right now. What are your thoughts?
Yeah, I've been bearish on IT. I think if you take out my interviews for the last 6 months, I've really not liked IT at all. The reality is that the US is not going to let more jobs be created in the US. There's definitely that tariff barrier which has always been there. They're being difficult about visas. They're being difficult about even giving work. Plus, as you mentioned about AI, AI is also taking some of the jobs away. So I think it's going to be a tough time. And I read somewhere that some huge number of workers, 40,000 or 50,000, were going to get laid off by the IT industry this year. So that's not a good number because normally they hire 20 to 30,000 each company and the big ones. And this year if they're going to be laying off 50, 60, that's not good. So we shall see. I mean, the space is changing. Whether Indian IT companies can actually change to reflect that and remorph themselves to new businesses, time will tell. Out of the IT pack, I would say the one that seems to have been performing well is HCL, but who knows?
On that note, Pashupati, what's your entire thought on which way the US may be headed? And the markets is what I'm talking about. There's definitely been a little bit of an ebb off on the US dollar. I don't know whether it's still going to sort of, continue to hold the crown or not. But the equity markets, I mean, some of the most fancied names like a Tesla, for instance, they're off a good 50% from their recent peaks.
So what's happening in the US is that demand seems to be slowing down because people are actually scared. They're scared of losing jobs. There's a lot of fear in the US about what's going on. There's supposed to be a Fed meeting today. I don't believe there's going to be a rate cut, which is also not going to make life any simpler. Yield spreads are also all over the place, so that's also not a good setup. So basically, we've got the US market in a bit of turmoil. The big winners, which were the big IT stocks, have gone for a toss. So now let's see what happens. And I'm not optimistic about the US at all. However, money is going back. Money is going back into debt. Money is going back into creation of new industry. And so, who knows what's going to happen there.
Right, okay, that's the take coming in on IT. Pashupati, we'll let you go on that note. Naresh, thanks as always for joining in, on the show. But Kunal, just a word on, this move in the index that we've seen in the last 3 trading sessions. And what revised levels would you look at when it comes to the Nifty now?
So I think 23,000 should be broken this time. So I think I would probably look at another 100, 150 points at least on the upside. So the pace of rally for the index is stalling. Like the last 2 days, yesterday was a big day for the index. Today it's a bit of a tepid day. You're seeing some bit of profit booking emerging, which means that the markets believe that maybe 23,000 mark is where we should probably look at a bit of a saturation phase, at least on the short-term charts. I think that's where short-term traders could probably try and juggle up the positions, try and look at shifting off from the large cap performing names and then moving up into stocks which have been underperformers or where there could be a higher generation of alpha.
Okay, Kunal, we'll see you again with the market action tomorrow morning.
Absolutely. Let's take a look at what today's trading session has panned out to be like. It's been a phenomenal trading day coming in. Although we've not done much, we've remained largely range bound. We've seen recovery over the 22,850 level first and now to above the 22,900. Although that seems a little iffy right now because we are very close to breaking below that level. Nonetheless, 22,900 is where we have been for most of the course of today's trading session. So that's looking good. A 0.3% uptick coming in for Nifty in today's trade. Let's take a look at what Sensex is up to. 0.2% uptick coming in for Sensex as well. So that is also looking decent in today's trading session. Not much happening on that front. Nifty Bank has been the real outperformer in today's trading session. An 0.8% uptick coming in with very good participation from both private as well as PSU banks coming in over here. So looking good for this segment as well. Let's take a look at what the broader markets have done today. They've done the real heavy lifting in today's trade because Nifty mid cap as well as the Nifty small cap index, both of them were up around 2.5% in today's trading session. There you have it on your screen. Sectorally, you have Nifty Realty, that's been the top sectoral gainer. A very good move coming in across Prestige Estates, Lodha, Mahindra Life, Godrej Properties, DLF. All of these stocks have gained very strongly in today's trade. PSU Bank, your second biggest sectoral gainer, 2% uptick coming in. The likes of Bank of India, Maharashtra Bank, UCO Bank, Central Bank, Indian Bank. Remember, Indian Bank board will also be mulling fundraising tomorrow. On the back of that, that stock was in focus, and that stock has also done pretty well. Bank of India up also 4.5%. So PSU banks have also shown brightly in today's trading session. Nifty Energy, Metal, Media, Bank, Pharma and Auto. These are the sectors in the green. Two sectors that have ended in the red and have not done well at all throughout the course of the days. Nifty IT and FMCG. IT being your biggest loser today with a 1% cut coming in. Remember, Citi came up with a report today wherein they've maintained a cautious stance on the sector. On the back of that, that sector was taking it on the chin today. Other than that, Nifty FMCG also 0.6% cut coming in across that index. You have names like Nestle, Colgate, Dabur, Britannia, Marico that have not done all that well in today's trading session. A couple of stocks to highlight. Vodafone was in focus for a bunch of reasons today. That 5G rollout in Mumbai, talks with satellite providers like Starlink. So all of those reasons kept that stock in focus in today's trading session. A bunch of other stocks were in focus in today's trading session as well. Steel companies in focus on the back of that protection duty coming in from the government. BPCL, Zydus Life, Bajaj Auto, Muthoot Finance. All of these stocks were in focus in today's trading session. Of course, Interglobe Aviation on the back of its analyst meetings. You had Garden Reach, Muscat Dog, defense stocks were up and away today. And that's how we're closing for the day, because that's what the roundup is looking like today. Nifty is looking above the 22,900 mark right now. We'll give it some time for these rates to settle, but it looks like we've closed above that level for the day. It's turned out to be a very solid day for the markets today.